Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So now, these are going to look reasonably familiar to you because the axes are similar to price charts. You know, across the horizontal or x-axis, that's dates, time. November 1st through December 1st or whatever. Just exactly like a price chart. Now the y-axis, however, instead of being the price of the underlying asset, is volatility, which can kind of throw you off a little bit, but look at it this way. Volatility is kind of one of the things you're trading with an option. Volatility is basically the price of the option, all else held constant. Now we're going to take a look at a volatility chart in just a second. But I want to kind of point something out here that's a little bit unique to volatility charts in comparison to price charts. Price charts, a currency can drift in one direction, theoretically fairly indefinitely. Maybe not quite so much as something like a stock. A stock theoretically really can rise to infinity. I don't know if you see that quite so much with currencies, but they can trend and continue trending indefinitely. Not really so much with volatility. Typically, each currency will have sort of a normal volatility range. Like maybe typically it rises and falls around an 11 volatility or something. And if it goes up to 12, 13, 14, it probably reverts back to the mean, or, goes back to the normal volatility level of 11 in this, hypothetical example. If it falls below to 10 or 9 or 8, you would expect it to revert back to its mean. But, when the world changes, when there are fundamental changes in currencies, all bets are a little bit kind of off. So, you kind of have to look at how far to go back. If you go back 10 years, there are probably enough changes where the normal volatility 10 years ago is not relevant to what's going on in the world today. So typically, I like to look at volatility charts over a 6-month period, sometimes over a 1-year period. So here is a volatility chart on the bottom with the price chart candles on top, which I simply got from the ISE website. It's there's a trove of information there that's pretty useful, and this is exactly what you want to be looking at if you're trading options. So, you're probably used to looking at a price chart here, like this is a chart of the Pt6, British pound. You probably analyze this stuff all the time. And maybe you look at this and you say, BPX has been kind of exploding higher. We broke through, our moving average here, our 50-day moving average. Maybe for whatever reason, based on this chart and the news, I think we're going to continue moving higher. Great. Fine. How do you do it using options? And you might say, well, I'm going to buy a call. How do you know that that call is not overpriced? How do you know that call is a good deal, a good thing to trade? I'll tell you how. You look at the volatility chart. There is an embedded volatility component in every single option trade. It's implied volatility. So you need to look at the implied volatility and get a feel for, is it high or is it low? Now look, The normal volatility here, it looks like it is about 11 in this one. Can you kind of see that? It's probably kind of small on your screen, but if you kind of squint a little bit, you can probably tell that when, over the past 6 months here, as implied volatility rises above the 11 level, it tends to come back down, and when it goes below the 11 level, it tends to come back up. Right here now, we're sitting at about 11.5. It's a little higher than normal. That means your options are a little bit more expensive than normal. That's the gold line that you're looking at there. Now the blue line, that's your historical or your realized volatility. That tells you what the volatility has been in recent past for BPX. Now if you look at this very last part here, this is the part of the chart that I'm looking at here. Okay? If you look at that, you can see, if you look closely, you can see that the implied volatility is above the historical volatility. Now, what does that tell us? Well, we can infer that the market is telling us that they think the volatility for BPX will be more than the actual volatility of BPX has been over the past 30 days. Although, here's the catch. And this is really kind of the crux of getting edge in option trading, and really the most important thing we're talking about that everything else we've talked about is leading up to. The market for volatility, in my opinion, is not 100% efficient. It makes mistakes. And sometimes volatility can be overpriced. And sometimes it can be underpriced. And the way you tell that is by getting good at reading volatility charts, by understanding the information that we've talked about throughout this whole rather intermediate level seminar. If volatility is too expensive, like arguably it is here, just a little bit, not much, but just a little bit. If volatility is too expensive, you shouldn't be buying options, you should be selling them. Or, if it's not practical to sell them, create a spread where you reduce your volatility risk. When you look at these volatility charts, it's really, really nice how the ISE lays them out for you in that there's the technical chart or the price chart right above the vol chart. So then you can really get a holistic picture. Now, when you see volatility changing and you see prices changing, it's very, very helpful to go back and, thumb through some news headlines and get a feel for what's going on. Well, why is BPX rising? Why is volatility greater now than it was? If you can't find a reason, that might help you confirm that volatility is overpriced.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.